everyone, welcome to Global Mantra Outlook 2014, a special show where we profile prominent global market speakers from the City of London and get their views on the global market environment. Joining me on the show today is none other than Jim O'Neill, without whom my series is incomplete. Jim, thanks very much for joining us.
My pleasure. Thanks for having me.
Last year, I remember same time, you were saying that it's going to get harder for the markets from here. How are you feeling about 2014?
I've got slightly contradictory views. On the one hand, a lot of the coincident indicators and leading indicators I look at about the economic conditions of the world are improving, particularly for the developed world, but also importantly for China, and that would be bullish. But on the other hand, some markets, particularly the US and Japan, have had a great year, and we're probably going to get higher bond yields. And the talk on tapering is not going to go away, and that's probably a negative. So I think it's probably a year where one has to be a bit more opportunistic and seize the moment as opposed to just stick with an underlying view.
But where do you spot opportunities?
Well, I was about to say that would be my overall view, but I think within the markets, it seems to me what most people would call emerging markets, some of them seem very interesting to me. We meet at a time where it's so fashionable to be bearish about them. And I'm in the middle of travelling to a large number of the different largely populated emerging countries, and the opportunities are still vast. So it might well be that some of them do very well.
So which are the top three markets, emerging markets, that you think would be in focus in 2014, which will do really well in 2014, or at least have the potential?
Well, I have to say China as the first one, because I think a lot of people still don't really understand what China is about and what's going on. But in saying that, I'd have to say I'd be bullish about the new China, but I'd also be bearish about the old China. So and this has been a theme of this year. People think Chinese markets have done badly, but you look at the Shenzhen, it's up probably 16%, I think, this morning, even though the Shanghai is down 7%. So, and I quite like the idea of being long Shenzhen, short Shanghai, because Shenzhen market has a lot more small caps and it doesn't have so much of the old China. And I think the leadership is highly focused on changing the Chinese model. And so you want to make bets on that. So I like that. I like some of the African markets. I think that's a big story. And of course, relevant for your audience, pending how the opinion polls go, as we're seeing now, the prospect of Modi becoming leader seems to be regarded as bullish, which I think makes a bit of sense. Not predicting that he'll win, but if he did, it would be bullish.
Do you think that it would be perhaps a turning point for India, post the elections?
I think it's quite an exciting year for India in that sense. The past 2 or 3 years I've been quite openly critical of India because it can never get anything done. Now, as everybody knows, it seems that this guy can get a lot of things done in Gujarat. And so, in theory, if he can take that to the national stage and show leadership, he talks a lot about this minimum government, maximum governance, and that's the sort of thing that somebody like me thinks India exactly needs. And if that kind of focus and decisiveness were present, many of India's so-called problems would be solved overnight. But whether he will win and whether he can bring together at the national stage what he appears to have done there, who knows? It's a tough call.
Okay, we'll come back to India and emerging markets in just a bit, but stepping on the global stage, how are you viewing the impact of tapering right now? Because as I see it, there's a lot of skepticism about what the event would bring. Even so, we've had a so-called test run, on how the markets have reacted to the event in the past. Don't you think the market, in the rally that we've seen so far, is perhaps taking a cue that tapering might not be as bad as people are anticipating it to be? It could signal a recovery in the economy, and that's good news.
Well, at the heart of the contradiction I said earlier is some contradictions that relate to tapering. On the one hand, the markets have spent actually the 6 months since I left Goldman Sachs talking about nothing other than tapering. So a modest tapering is sort of priced in. So if it happened, even if it happened in December, I guess we'd probably get over it pretty quickly. Secondly, as you implied with your question, it kind of depends why. And if it's because the economy is strengthening a lot more than the Fed has assumed, then that's probably not so bad either. But against that, having been around as long as I have, I lived through 1994, and central bank, particularly the Fed, tightening and rising bond yields, it's not normally very good for equity markets. So it's tricky. It's partly why I think one has to be opportunistic. Final thing about it, I would say, my hunch is when Janet Yellen is installed, she will probably be happy to taper, but make it clear that the Fed might not actually raise interest rates till unemployment goes down even more than people currently think. And she's more dovish than Ben Bernanke, so I think her becoming Fed chairman is net a positive for global markets.
So what convinces you that they could go ahead with tapering in December? I mean, how much does the timeline really matter, or is the reaction going to be the same?
Well, I think the timeline matters because it depends on the circumstances. So if they don't go in December and it's delayed until the spring, you've got a whole lot of new data for people to start thinking about as you travel to that period. And there's a case to be said that if they're going to, at the end of the day, if I'm right that Yellen's going to be pretty dovish about underlying interest rate policy, does it, get it out of the way, you're going to do it, so stop people talking about it. People in India would certainly like them to stop talking about it.
The risk of deflation, I mean, they're talking about all these scenarios could change if inflation actually doesn't move up in the US, right? And, we could perhaps even see quantitative easing, that's QE infinity. I mean, there's talk about that in the market as well. How does that completely change the outlook for 2014 or for the coming years, if that were to happen?
I think this is a big question you're focusing on, and it surprises me a little bit that there's not more attention on it as we come towards the end of this year. In the US and the Eurozone, inflation is undershooting what the policymakers have as their target. And you've got a very dovish Fed president, Fed chairman, chairperson coming in. And you've got I think, quite a dovish person running the ECB as well. So it's not impossible that you could get more QE because, these guys...
What are the chances? I mean, what's the probability that you would ascribe to it right now, sitting...
I don't have to do things like that anymore. Put it like this.
Even better. You can be,
put it like this.
Stick a neck out.
Put it like this. I don't think it's impossible. I don't think that's impossible.
Okay. It's still in the realms of speculation as well as, scenarios that can be constructed for 2014.
Yeah, definitely.
We could see quantitative easing
in the US and Europe, they have inflation targets. And right now, inflation is under target. And if it drops further, that will make the policymakers really worried about a deflationary challenge, including further rise in the national debt because there's no growth in the nominal GDP. And they're not going to accept that without trying to fight it. And that means, if it happens, more QE.
And over what period of time do you think that assessment will become clear?
I think in the first quarter.
Shifting focus on the markets, the US markets are at record highs. And I think that's why tapering becomes such an important element. Does the market go up from here? Does the market brace itself for a strong correction? Where do you think these record highs will take the markets to?
This year's been another classic. You sort of sell in May and go away and come back in the autumn and buy. And there's this remarkable pattern that goes on year after year, not every year, but most years, where the markets are really strong. I'm talking about the US, sort of October through April, and then you've got to be careful. And a lot of me thinks, well, why will that not just continue? So long as the Fed doesn't taper and then send a hawkish message with it, I could see the markets rallying, the US markets rallying further. That said, it's not cheap.
Exactly.
You look at the forward PE, which I spent a lot of time doing in the past, It's not cheap at all. So if bond yields were to rise more than the Fed would like, or they would be not capable of stopping it, I don't think that would be good for the US market. So, going back to what I said at the start, I think it's going to be a bit more opportunistic. I don't see a straight line rally. To me, the past 5 years since '08 or early '09, it's been easy to be bullish on the US.
Yeah.
Now I think it's a bit trickier.
What does that mean for the dollar?
I think a lot of the major currencies are stuck. What I would say to your question is this is a year where many people thought the dollar was going to do well because it was the least of the worst. But what they underestimated was the strength of the Fed's dovishness. And with Yellen, I'm not sure it's that easy for the dollar to rally much. And another thing related to it that people forget, the US does not want a strong dollar. The US wants to export just like everybody else. So I don't see the chance of a big rise of the dollar against any major currencies. I wouldn't want to make a big bet on the dollar at this stage.
Do you think 2014 would be for Europe what 2013 has been for the US? The markets just take off from here. They have done really well.
Yeah, they've done pretty well already, haven't they? So I could see it continuing. Yeah. If I put it in the context of my past and all the crises I've gone through, there are many parts of the peripheral European thing that remind me of the Asian crisis.
Yeah.
And it might well be that this time next year, people are talking about just how well the economies of the periphery are recovering. You look at Spain and Greece and Portugal, those three already show some signs of certainly stabilising, if not recovering. And underlying all the change and chaos, I think there's quite a bit of positive structural change going on. So I think they could do well.
As a basket, in the years gone by, you have had emerging markets outperform developed markets, especially 2011, 2010 were decent years for emerging markets, as a whole. So I think from that point of view, do you think that there could be, a time in 2014 when we could see a very clear outperformance coming in emerging markets?
No, on balance, because again, the whole Fed tapering issue is going to be there all the time. And going back to the only year that's been a really bad year for bond markets in my professional career, 1994, that wouldn't generally be good for all emerging market asset classes, including both bonds and equities. So I think it would be dangerous to believe that EM can outperform significantly against that background. That said, what the Chinese do specifically about the growth of the RMB and opening up their own markets, that could be a really positive for the EM world.
What's the view on India? I mean, we've spoken about that. You've spoken about how elections are an important part of India's outlook. But do you think that in the last 6 months, all the measures that have been taken to stabilize the currency, rates have been increased in India, the expectation is that the CAD will come in much lower than what it was pegged at initially. $56 billion is the latest target. All of these are signs that perhaps the worst is behind us.
I remember we spoke a few weeks ago when the rupee was at its lowest, and I said to you I wanted to consider buying it, and I feel like I missed the chance because people have got so bearish about India and the rupee. And as you've just said with your question, it doesn't need a lot for things to get better. And so if you have that improving current account and you have Modi and you have a supportive cabinet and you get a load of policies to boost FDI, the rupee could be back in the mid-50s. It's not impossible.
But that could happen in 2014 itself?
Yeah, of course it could. But, that's why I always laugh when people go on about this sort of mini crisis in India. India's current account isn't that big a problem. The reason why it's a problem is because the government's been so weak. India doesn't really attract much FDI, but lots of people would love to put FDI in there. Just as, in the days before we're having this discussion, Marks and Spencer's, a big UK retailer, announces it wants to invest more in it. Loads of people would want to invest a lot more in India. So if we had a more receptive environment, current account wouldn't be a problem. And if it improves, then it'd be easy for the rupee to rise.
So do you think the market is pricing in that right now? I mean, more than anything else?
I think the market's a bit schizophrenic about India. You know, there's this rather amusing phrase being dreamt up, I believe they call it the Fragile Five.
I was just about to come
right?
to that.
And India's a shining member. And so people are sort of schizophrenic about India along with a couple of the others. And so I suspect that will remain until we get the election out of the way. But if you get out of the election some kind of strength of economic policy leadership, India could be one of the best bets in the world next year.
Well, why is the Indian market at record highs if there's so much skepticism?
Well, it is interesting because you've got the equity market doing so well, and yet this paranoia about the rupee. And it might well be that some longer-term investors that don't tend to get so wrapped up in the foreign exchange market are starting to price in some probability that you're going to get more clarity of policy and policy leadership.
What about the export potential from emerging markets? I know you spoke about how a big market is UK, but just that the theme has been played up a lot. You know, again, to tackle the current account deficit, there's much focus on building exports. But if everybody tries to build exports, you know,
well, we're all going to export to Jupiter at the same time.
I don't know. Yeah, where will all the exports go to?
I don't think that's a 2014 story for the emerging world.
Okay.
One of the reasons why the currency decline is probably going to end up being helpful is the huge rise in wages that's been going on in so many of these emerging economies. It's made them less competitive. So, as I said about the UK here, you hear UK retailers that have spent 40 years importing from all these places all over the world. They don't find it so cheap anymore. And so I think what we're really seeing on a global basis is a bit of a shift back to the so-called developed world, and you've got a bit of momentum behind exports from here to the emerging world. Now, for India, because the rupee's fallen so much, there is a chance for it to get some market share competitively.
What will drive growth in emerging markets then? I mean, do you think we're pretty much at the bottom of the cycle? Do you think a recovery is in place in 2040?
Listen, the single biggest thing I've seen for weeks in the middle of all this talk of negativism was on the 12th of November, the day after so-called Singles Day in China, when Alibaba reported that by lunchtime, their online consumer sales had been already the same as they'd done in the whole of the day last year. And by the end of the day, it was double. Wow. You know, the biggest story in the world is the growth of the Chinese consumer. And it's such a vast place, and China's creating so much GDP. There's plenty of juice there for a lot of people in the developed world and elsewhere in the developing world. But you've got to have products to sell to them that they want to buy, and you've got to be competitive.
But then there's the issue of inflation as well for all these emerging markets, which is eating into their nominal growth. So, you know, how does that story play out?
Well, it's what I touched on a little bit earlier in a different way. It's eating into their competitiveness, and of course, in some cases, it puts policy pressure to tighten monetary policy further. So they've got to do things to boost the productivity in order to keep growth anywhere close to the levels that they would like.
So you think rate hikes would pretty much be the order of the day in 2014 in emerging markets? We've seen some in India as well.
Yeah, I wouldn't be surprised if India has to consider raising interest rates a bit further in the near term, because inflationary pressures still seem to be moving upwards, and you know, India doesn't need, you know, I don't think it'd be good for India to start getting into a world of persistently higher inflation. So it's not a nice choice, but they may have to raise rates again further to try and get that under control. Now, back to the election yet again, you get through that and you have some big structural policies that create more productivity and supply side reforms, then you could get into an environment where people could seriously believe Indian inflation would fall a lot. And then we could get rates dropping, but I can't really see that happening until there's signs of some serious policy change.
So everything depends on the elections?
I think it's a big election for India, yeah, I really do.
Are you expecting that you know, there could be more infusion of capital in global markets from the kind of QE or rather quantitative easing that we're seeing in Japan? They're putting in about $70 billion each month.
Yeah, it's huge. It's, you know,
and somehow that money has not found its way outside of Japan.
Well, it's also quite interesting, again, talking about how I sort of look at things from a distance. People go on and on and on about Fed tapering, but you look at the scale of what the BOJ's doing, you know, that has global ramifications. And I suspect behind the scenes, the infamous Mrs. Watanabe is probably slowly buying more and more emerging market debt and equity. So I can imagine that that's going to at least continue, if not possibly accelerate.
Before we wrap up, and this is my favorite question to you, your top 3 money-making strategies for 2014.
Top 3 money-making strategies? Yeah. I don't do that anymore. Oh, God.
I know you gave me 3 last year. Actually, one which you were so bullish on, which was the dollar yen, and you repeated that 3 times. But you were also bullish on China.
I did, didn't I? I said dollar yen, dollar yen, dollar yen.
You were bullish in China. You were bullish in Europe.
So I got 2 out of 3.
Yeah.
I don't do this anymore. I refuse to out now.
Okay, maybe
I guess number one, Chinese consumer-related equities, which is I do not mean the Shanghai index. That would be my favourite pick for equities. Secondly, I have a sneaking suspicion that the yen is going to weaken a bit further, or a bit, maybe somewhere between 110 and 120, and that would be the only currency bet I would make. And I think thirdly, I'll go with peripheral Europe again.
Okay.
But I don't have to be responsible for any of this anymore.
No, you don't. Interestingly, you didn't talk about the rupee dollar.
I didn't say the rupee, but...
Does it still look attractive to you?
Yeah, it does. It does.
All right, Jim, we leave it at that. Thanks very much
My pleasure.
for joining us and giving us your views into 2014. With that, we come to the end of this edition of Global Mantra Outlook 2014. Thanks very much for watching the show.
I've written a piece a few years ago being very, very bullish about India in the long run as the one emerging market which will probably emerge. And I've never owned an equity in India because the equities are too expensive. You know, as a macro strategist, I should be telling you how important it is to look at the economy, and that will tell you how much money you make in stocks. Well, it isn't. What's important is the value you pay. And one day, the Indian equities will be cheap enough to buy, but it's certainly not yet.